For those who don't know me, my name's Richard Betts. I'm the group publisher at Real Asset Media. We run around 60, 70, 80 of these events a year, focused on hot topics, sectors, locations, and we obviously run a series of these at MIPIM, a whole program, as well as at Expo Real and other fairs across Europe and latterly the world, and hopefully back to the world again soon. Thanks very much for joining us. Super panel here. So let's just start with some introductions. Jean-Philippe, let's just start with you.
Yeah. Hey, my name is Jan-Philipp. I'm the managing director of Gabe Industrial. Gabe Industrial is a German industrial platform. I think we are well known in Germany. We have about 9 billion under management, and we are one of the few fully integrated platforms. So we do development, we do asset management, we do fund management, and therefore we are quite successful in Germany. And for 3 years, we're already on our pan-European journey. So we try to expand to other countries, and we are already very active in the Netherlands, very active in the CE in the last years, and we just started our Spain business, and we just started our Italian business. Yeah, that's Gabe in a nutshell.
Great, thanks very much. Ramon.
Thank you very much. I'm Raymond Vos, and I'm with CTP since the start of the business. CTP is a listed company. We are on the Amsterdam Stock Exchange. And we have built over the past 20 years a portfolio of approximately 12 million square meters, which we plan to double over the coming 5 years. Mostly in Central Europe, but also with activities in Germany, Holland and Austria. And as a CEO, I run it with another 500 colleagues of mine.
Perfect, thanks very much. Robert.
Robert Dobrzycki. I am CEO and co-owner of Panatoni's European business. Panatoni is a development company, industrial development company present in US, Canada, and obviously Europe. In Europe, we have developed so far 14 million square meters. Currently, we are having under construction 4.5 million. The business still grows. We expanded to multiple countries recently. We cover almost entire Europe. And we are a private development company.
Great, thanks. Daniel.
Hello, I'm Daniel Harris from K International. We're a real estate and investment manager that operates in Europe and the US with about $10 billion under management. We do all sorts of different things. We invest in offices, residential, and of course logistics, and which is our first logistics transaction in the UK. We announced it a couple of weeks ago, acquiring about 550, 600 million worth of assets, about 3.3 million square feet.
Great, thanks. Tom.
Hi guys, I am Tom Kinsley. I'm an executive director in the CBRE Logistics and Industrial team, pan-European. We have done about 40 to 45 billion of deals in the last 4 or 5 years. And we work closely with our leasing guys and our American team and our Asian team, and to bring all the capital over here to Europe to sell lots between 5 million up to 10 billion plus.
Super, thanks very much. And we're going to be looking at some of the kind of key trends, macro trends that are also driving this, and what that means then in terms of the influence for, I suppose, for investment going forward, and what that means in terms of supply and the requirements in terms of the real estate sector of that. But I wanted to start just noting what's happening, of course, in the terrible war in Ukraine, and also particularly to Robert and Ramon, that it's been extraordinary to see what's been happening in the region in terms of support from the sector, I think for the refugee effort and those kinds of things. So I just wanted to note that at the start. I know that's not what this is about, but it has been very inspiring to watch from London, certainly from my perspective. I mean, just picking up on that point, I guess, in terms of the overall trends at the moment, and let's start with you, Tom, maybe. I mean, what are you seeing in terms of the drivers here? We've talked a lot about e-commerce and those kinds of things, but where do you see us now versus, say, let's say 12 months ago? We'll imagine we were here for MIPIM last year. What's changed?
So I think the main change is the realization of rental growth. I think a lot of us have been talking about it, seeing it in the US and the UK, and in certain pockets around Europe for the last few years. But even up until 12 months ago, there's a lot of my colleagues and investors all across Europe who, in their entire career, had never seen any rental growth. And they just couldn't believe it could happen. They just thought it was a market without it. What we are seeing now is investment managers and, importantly, frankly, agents, leasing agents who believe it. They're seeing it. The US markets have been seeing 10, 15, 20% plus per annum last year. We're now seeing not quite those levels in Europe, in most places, but significantly higher levels than we were 12 months ago.
Okay, good. And Daniel, from your perspective, obviously entering into the market, for you, what were the key drivers? What made you decide to enter now? I suppose what were the key kind of things behind that led to that decision, and why now? I suppose.
Look, we've been looking at logistics for a while, and the thing for us was always, how do you enter at scale? We weren't, as a business, we weren't interested in buying a single asset. We wanted to try and find a portfolio, a platform, and a portfolio and platform we could then grow. So finding a transaction at scale was always a challenge for us, and something that was a homogenous portfolio. We didn't want one asset in various different countries. We wanted something that was sort of in a single market. And so we looked for a transaction that was, ESG was very important to us, a high quality, environmental, green, whatever you want to call it, portfolio was important. But ultimately, as we just heard, rental growth was the key driver. We are seeing significant rental growth in the UK, and the reason we picked the UK over other markets was that rental growth. Yields are low. Wherever you look in Europe, yields are generally low. So if you're going to make your returns from somewhere, and we felt that rental growth is really coming through strongly, the demand-supply imbalance is significant in the UK, and that presented an opportunity for us to come into the market now.
And what's, I suppose, for anybody here on the continental European side, how does that compare in terms of potential rental growth, the yields? I mean, what's your sense of that? Is it different in continental Europe to the UK markets? Anyone want to pick that up?
I can speak on the Central European markets in terms of rental growth in the Czech Republic. We just talked with Robert together. The Czech Republic, Pavel Savicka is also here in the audience. The Czech Republic, definitely rental growth between 10 and 20%. I think that's because of, there's a strong demand, and demand comes from nearshoring, manufacturing, but also e-commerce related, etc. And the Czech Republic in particular, I think, because out of the Czech Republic you could also serve the German market and so on. So there's a strong demand, has always been. There's small supply, so obviously because of that, with the construction costs going up, you need to achieve rental growth in order to hit your yield on cost returns. So Czech Republic for sure. Yeah, in other markets, a bit less, I think, but overall throughout the region, there's definitely rental growth in Central Europe. How that compares to the UK or the US market, if I believe Prologis, they said that they have way more than 40% or 20%, sorry, I think they mentioned 40% rental growth in the US on here and there, I'm not sure. Anyway, like for like, at our portfolio is like around 1.6% if you have the indexation or inflation. But if you have new stuff which comes to the market and you can lease again, check for sure between 10 and 20%. Yeah. So okay. Rental growth in the future for sure, I think so, yes.
Okay.
Structural thing.
And Jan-Philipp, same for you?
I think that's exactly the same for Germany. I think from my perspective, the main question is the future rental growth above or below the inflation rate? Because I think that's an important point. I think I am personally expecting a high inflation rate for the next 3 to 4 years. And I'm really looking forward, do the tenants can pay this rental growth from the indexation, because they have to do this additional margin within their own business model? That's the big question. So I'm really looking forward, how does that work out? Because as a landlord, I'm just sending a letter saying, that's the indexation, please pay. And then they have to find out, could they pay the new rent? That's quite an interesting question from my side. But yeah, I'm quite positive regarding rental growth because we all need it. Regarding what you just mentioned, building cost, steel is a big topic for all of us.
And in terms of inflation, how is that going to influence the market? I mean, we've had lots of discussions around the impact of inflation on various sectors, whether or not it's overall positive, whether or not real estate is an inflation hedge, what that means. But I suppose, how do you see that in terms of the sort of risk side as one of the kind of trends that we are seeing for sure in Europe?
I guess from our standpoint, obviously, inflation is uncertainty, and looks like it's going to stay with us for a while. For the next 6 to 12 months, there will be inflation pressure in Europe, in all the places we operate, and on the continent and the UK. So demand is still strong from the occupiers, from the tenants. So the inflation has to obviously be reflected in the rental growth, and it is. I mean, this is the only, because you can't find it in the land price, you can't find it, I mean, construction costs are going up. The only way to kind of, to compensate for all these changes inflation-wise is rent. Potentially in some places still there is a yield compression, but in most of the kind of core European markets, the yield is at the level which is hard to imagine that it will compress further. So the only release from the pressure is rent, and there is a tenant demand. Tenants need space; they will pay more.
So, look, it depends where you are in the risk curve, right? If you're a developer, construction cost inflation is the biggest issue you're facing. As an investor, indexation is relatively attractive if you own those assets. You know, in the UK, we have you take longer leases and you have open market rent reviews every 5 years. The biggest discussion with tenants at the moment is they don't want open market rent reviews on the 5 years. They want indexation. And then when you get into the indexation discussion, what's the next biggest conversation? The cap and collar on the indexation. So you're typically trying to cap and collar at 1 and 3 for those tenants with probably stronger bargaining power. Otherwise, it's probably 2 to 4. But the idea that tenants don't, it's changing the UK market to go to an indexation market rather than open market rent reviews, because people are worried about what their rent will be in 5 years' time with a higher inflation. So your risk and reward around inflation depends on where you sit on that sort of profile, from buying the land to being the long-term owner.
And from an investor point of view, in the last 24 months, I heard a lot about bets and sheds. They all want to invest in bets and sheds. And if I compare bets without inflation hedge and sheds, which are indexed, it's a much better investment.
Okay, good. I wanted to pick up a little bit on, one of the other key kind of trends, in a way, exacerbated by, the global political situation and Ukraine as well, is, the world been striving for globalization for a long period of time, and you see that coming away again. So what's the influence of that on, let's say, supply chains, global trade, and what does that mean in terms of logistics? And let's stick to Europe for the moment for that. Does it mean more supply, less supply? What's the situation? Tom, pick that up if you want, and then...
Sorry, do you mean in terms of new warehouse stock coming through?
What I mean is does it mean that we need... if there's going to be more onshoring, we've obviously had the European Union concerned, everybody concerned during the pandemic about supply chains, but we've now got the European Union talking far more about that we need more resilient manufacturing, so more nearshoring, onshoring. So does it mean more logistics, less logistics space, or the same?
So I think it's going to mean more logistics, and I think a lot of these occupiers are going to be balancing up two things. One is the cost of a more defensive supply chain by having more inventory to hand, and that's expensive. That hurts your EBITDA, and you need more warehousing to go with it. The other risk is that they keep a very lean supply chain with less supplies on hand, and they just hope that the supply chain that they're running works well. I think we've seen in the last 24 months, due to COVID, due to other political events ongoing, actually supply chains, the way, how fragile they've been up until this point in the last 30 years, I don't think that's sustainable. So I think a lot of occupiers are going to have to really reassess that.
Okay, good. Any other views on that, Roman?
Yeah, no, this is definitely what we are seeing. So you have clients who want more warehouse space because they want to have a stock inventory, because not of Ukraine, but also previously Suez Channel, COVID, all of that. So, and plus that shipping it in from China is much more expensive than it used to be, blah, blah, blah. So you see that they bring more stock, and also they bring more activity to Central Europe, I think in most of the cases, because that's the best place to be if you want to have add-on kind of manufacturing and employ people. So yes, that's definitely what we see, which will increase the demand for warehouse or and light manufacturing, which is what we see. Yeah, so that means also therefore high occupancy and strong demand going forward, I think.
And you mentioned their CE especially, Roman. So do you think that will actually increase the requirement in CE versus other areas, or what's your sense of that?
Well, other areas in terms of for manufacturing, I think yes. The Central European region is known for motivated workforce, etc., etc. So that there is a lot of proof of that, and so you've seen many factories have been built and are being built while we speak. So you see that, so that continues to attract, all kind of different manufacturing, and whether this is automotive or whether it is going to be the defense industry or the military industry, which is going to grow, or whether it is electric bikes or parts for data centers, all of them we have in our parks. And I think that's a trend which you see, which will continue to grow. Yeah.
Okay, good. Technology, also one of the big kind of technology, digitization, artificial intelligence, one of the big points as well in general for the built environment. How do you see that playing out? And we've had a lot of discussion before in these sessions around drones, around electrification of vehicles, self-driving vehicles, all of those kinds of things. Robotics, especially. What does that mean? How much are we going to actually see that? Particularly in terms of the development side. What I suppose also, what are we developing in? Might be good to pick up with you, Robert, there on. You're obviously having to look at developments over the next 5 years or whatever. So what are you putting in, particularly if we're looking at much higher usage of electricity, for example?
Yeah, absolutely. I mean, this is completely influencing the sector we're in. So, I mean, the whole e-commerce story is digitalization, right? And the second trend is obviously data. So we see much more demand from data center companies. So e-commerce demanding different buildings. E-commerce demanding it's much more labor-consuming operation. So obviously labor proximity. Then on top of it, you have electricity. You have a different height. You have completely different approach. But still, when you look at the buildings itself, the building itself for the last 10, 15 years, obviously technology is adjusting the building, but the shell is still the shell. So it is also good for, I mean, from the investment standpoint and what we do, that the shell itself, it's still pretty kind of sustainable in terms of specifications. So, but yeah, I mean, also how the European markets are working in terms of like supply chain and supply from one place to the other, e-commerce wise too, consumption wise too. I mean, it is obviously pushing us into new territory in terms of development too.
Okay, good. And in terms of, I suppose, that plays then into also ESG in a way, if there's more power being consumed. And in terms of that, I suppose, Roman, let's maybe start with you on that. So in terms of ESG, sustainability, how important for you then is both the E side, but also increasingly the S side, potentially?
Yes, well, I think that this has been always in our DNA, because we would go out and build a park to hold, to keep. So we would always think about, okay, we're going to build this building. This building is going to sit there for 30 years or maybe for 50. So we will have multiple generation tenants using this building. So as Robert said, we need a generic design, something which is going to last. But also you want to build a property which is like low on maintenance and repairs, and then all of that. But also above everything, you want to create a very pleasant environment, I think, for people who are going to work there. So you're going to look at, can we add sport and leisure facilities on site in a park, or can we have a clubhouse where we have free medical care, or a clubhouse where people can come to meet, create an ecosystem, offer free education, offer affordable housing is what we do in some of our parks on site. We obviously will see Ukrainian coming to the region of Central Europe, but that's not something new. That's what we have seen. So that these are people who actually work in Central Europe, but are not necessarily Czech or Romanians or Hungarians. But for those, we offer housing on site, and we do offer housing for young professionals, blah, blah, blah. So the S, if you talk social, or the E, if you talk environmental, and all of that, ESG has been always and is a very important thing for us. We score high on that. We do we grow forest for every square meter of building we build. If you build 1 million square meter, then we grow 1 million square meter of forest. And in the Czech Republic, again, there's lots of opportunities, because there used to be monoculture. I'm not going to go into the forest thing too much, but it used to be monoculture because that was wood or forest timber for production, really. And we now turn it back into multicultural with different type of trees, etc. So we really grow forest 1 square meter per one. And we do solar, and so we're carbon footprint neutral, indeed. And that I think that's in our DNA, and that's the way forward, because we have this opportunity to make a difference and to do a good job, and then we try our utmost to be very responsible for also the communities where we invest and operate. So that is very important for us, that long term. Yeah, so that's nice.
Okay, good. And feel free, anybody else, to pick up on this. But Tom, looking at the sort of institutional investors who are coming into this, is that an absolute must-have for them? And is that the same for occupiers at the moment? I mean, certainly the big players like DHL, for example, Amazon, yes. But some of the smaller players, are the investors a bit ahead in terms of the sort of ESG criteria?
The investors are definitely ahead. I think a lot of occupiers are catching up. I think on what Raymond was saying, it's a very good point, because the S side is not only good to do from an ESG perspective, to have those facilities there, but it's increasingly tough to find workforce in many areas. So if you want to have a point of difference as an occupier to attract people, then you should be putting some quirky features into the building. And on your first question about how investors are looking at it, on the ESG as a whole, I think the more core the buyer, the more institutional and the sharper the prices, the more important these ESG factors are. There is a bit of a delta. When you're going into some more of the core plus capital, they're conscious of it, they need to underwrite it, but they don't only need to buy buildings with those features. They can put those in over the course of their whole period.
Okay, good. And Daniel, in terms of, everybody's talking about resilient, future-proof buildings, and nobody had been really talking about that much in the logistics space, because everybody's view, not everybody's view maybe, but let's say the general view seemed to be, well, it's just a box. What can we do? What's the position now? And I suppose, how do you see that going forward?
People are trying to, when we buy a portfolio, in the UK, we're signing leases of 15, 20 years, 25 years. So if you start with just a basis of, if you go to France, typically you do a 369. In Poland, you have 5-year leases. In the UK, you have long leases. So before you even start, you're thinking, well, the chances are I'm never leasing this for less than 10 years, and I might lease it for 25 years. So your starting position is, I've got to build something that is relatively sustainable, in terms of just what it is. So, when we looked at the portfolio that we're buying, these units have moved on so much, in terms of their quality, their standard, floor, ceiling heights. 10 meters used to be the standard. Now we're buying stuff at 14 as an average, and one of our buildings we're buying has got 18 meters. These are transforming what the industry used to be. Roof lights, there never were roof lights in these buildings. Now 40% of the roof is covered with glass windows, so you can see, and solar panels covers the rest. It's a very, very different sort of product. So someone might, when you drive up the motorway, you can see the older units, you can see the newer units, they just stand out. And I think that's what's important, particularly where your tenants in a market like the UK are just going to sign up for such a long time.
And yeah,
I just want to add one thing, because you just mentioned it's just a box. And I totally agree. If you just look on German logistic assets, they look just like boxes. But if you look to our neighbors in the Netherlands, I quite often see buildings. I'm totally impressed. They look like office buildings. They just bought some asset in close to the Schiphol airport. And it doesn't look like logistic anymore. Regarding ESG, I think they're the first country. So they have green facades, they have this light bands on top of it, they have even a rooftop garden for the employees. And I was quite impressed regarding ESG. Netherlands is #1 country.
I mean, I was in one of our units last week. It was a typical London, well, it was just outside London. It was a typical UK grey, miserable, rainy day. And when you've got 40% roof lights and you've got windows across all the dock doors, because that's one of the places where, where most of the work is done, you're sitting there going, there's no lights on here, yet the building looks light. The offices now, when you come into them, you have double height entrance halls in logistics offices, and you go into the toilets, they look like the toilets you'd find in an office building. These units have moved on dramatically in the last 5 years particularly. And compare it to 15 years ago, it's just another world.
And maybe can I just one more thing about that, because we don't really build buildings at CTP. It's more like a park, so you get all kind of companies in one park, and then you have companies involved in logistics, manufacturing, e-commerce, and they work together. So and I think, and we talked about also touched on rental growth, and then I think but the rents have always been very low. As far as I remember, it's always €4 or €4, whatever, a little bit. Never seen any rental growth. So it's. Maybe you're just catching up on something. But and I do not agree with the buildings used to be 10, now they're 18 meter high. We have tenants who probably produce these kind of tables, right? Or, like normal businesses, companies who need space for whatever they do. These small units, SMEs and so on, and they sit in this park. And that's also why I'm saying this unit can be used for different type of use in the future. So I don't think that a lot of buildings specifications change because of technology. They change because of LED lighting and those kind of things. But yeah, a proper space with a bit of ceiling height for light manufacturing, assembly, warehousing, film studio, furniture maker, whatever, plumber. That's also the kind of units we do. Maybe like in the UK, is at Secro, I think they've done that and they do that. And I think you do inner city kind of stuff. These smaller units, that's also big industry. It's part of this industrial. It's not just warehousing. I mean,
but does it mean that there's at some point we're going to have, if the requirements have changed, is that everybody's going to be changing their requirements, and so therefore we're going to be seeing some of these assets that were built maybe 20 years ago, 30 years ago perhaps, that are no longer going to be lettable? And that we have the situation that we're looking at potentially in office and in other areas where they don't meet the ESG criteria or whatever, and so then it becomes very difficult. Anybody can pick that up, yeah.
I think it depends. So if you're by the side of a motorway and you're looking for a 500,000-600,000 square feet or 50,000-60,000 square meter building, then all those things are very important. When you're looking for last mile inner city buildings in London, you will try and find the new developments, but if you need to be in London and you need to find an older building, then that's what you'll take. And that's the challenge really, is how location is always irreplaceable, particularly in city centres. Not city centres, a bit tight, but in central city locations. And so the market can only do what it wants to do, because the shortage of space is so dramatic. But my view is, when you move to the bigger boxes, more out of town, more regional, there is a difference in quality, and those older buildings will ultimately probably be replaced.
And in terms of the, some of the trends, obviously Asia, I mean, interestingly, that it was probably 2 years ago we were looking at trends coming from Asia. One of them was wellness, interestingly, and the other one was multi-story. So are we going to see more sort of multi-story given the competition for land and space? Does anybody have a sense of that?
Raymond's just acquired a rather large multi-story in Amsterdam. I mean, on that, I think the answer is yes. And I think developers owners and occupiers need to be more creative. I don't think it's good enough to say that there's a lack of urban logistics or there's a lack of residential. I think we need to build up. I think we probably need to start trying to find creative ways of mixing residential and warehousing. I think we need to be more creative. And exactly as Raymond's just acquired in Amsterdam, that kind of asset I think it's going to be bang on, and I think we're going to see more of that going forward.
Okay, good. And in terms of locations, if you have, for example, driverless vans, then you don't need to have a driver plainly, so you're not stuck with the same legislation about hours driven. It then becomes how far can that truck get before it runs out of battery, I guess, at the time. Or if you have drones, or if you have other things like that. And also bearing in mind the focus on a lack of employees, which you mentioned as well. Does that mean locations are going to start changing, moving towards where there's employees, or beginning to adjust, or is really logistics about where you're positioned in the proximity to the city or to an airport, or so is there going to be any change in terms of locations?
I think I can answer that question for Germany. In Germany, in the last couple of years, we saw a trend regarding to B and even C locations. So it started in Eastern Germany. We started with Halle. So Halle was a hotspot for logistics. Then Halle was fully developed and went over to Magdeburg. So 3 years ago, nobody was really keen on Magdeburg, and I had a big discussion with investor if Magdeburg is the next place. Now Magdeburg is nearly fully developed from various developers. And I just heard yesterday that Intel is building a huge factory down there. And now we go even more eastern, and I think the main factor is labor availability and how close you are to the next German autobahn. I think that are the main factors at the moment.
Okay, and Robert, what's your kind of sense of that? What are people looking for in terms of location?
No, obviously, I think the biggest factor, location-wise, is availability of land these days. In Western Europe, in Germany, in some bigger cities, it's very hard to get by permit land which is in the inner city or close to the city. So the distance doesn't mean much these days to the city. It's about availability, and obviously availability of labor and proximity to the consumption base. So over the last 10 years, and we were trying to kind of capitalize on that, and we were developing in smaller and smaller locations around Europe. And before, in big countries like Spain, there was Madrid and Barcelona. Now it's like probably 10 markets that are really kind of great in terms of consumption and take-up. So it's getting closer to labor, closer to consumption base. You have a lot of, obviously, big boxes, but also smaller units, which we have to be close to the city. So the amount of markets grew substantially over the last 10 years, substantially. Obviously, the market grew too, but and that's the main driver, in my opinion. On previous questions about specification, I think that the building itself and specification is secondary. I think the value of location and value of land will be growing over time. There'll be more and more percentage of the total project cost. So the construction itself and structure itself, you could replace it. If land is 60-70% of the whole cost, then if it's 10 meters, 2 meters, you can demolish and put a new building. The value is in real estate, in land, and proximity to the consumption. That's what's valuable in our sector.
Okay, good. And looking at one of the other key trends we've already mentioned here is e-commerce grew a lot, obviously, during the pandemic because everybody had to buy online, in essence, because nobody could leave their house. What's the situation now? That's grown. That particularly grew in the UK. I'm very aware of that, and also I noticed that in Europe. Is that going to now drop back a little bit, or now that everybody's got used to doing it, will they continue doing it? What's the sense? What are we seeing in terms of the e-commerce? But yeah, Tom, you can start. Yeah,
I think it's going to keep growing. I think one of the reasons that it's popped so heavily in the US, China, and the UK in the last 2 years is not only because we've all been locked down, but everywhere's been locked down. It's because we have had a slightly more advanced real estate infrastructure to service that demand. So I think what a lot of these companies are now doing, including a lot of developers here with us today, people are building a lot more real estate to service that. Now that is going to allow these countries to catch up. I don't buy into an argument that culturally some countries don't like this or that. I admit there's going to be a few bits like that. But fundamentally, I think if you build the infrastructure, people will veer towards convenience. People will veer towards saving time, and therefore I think e-commerce is going to continue to grow across Europe.
And is that everybody's sense? I mean, are we seeing more demand for e-commerce? And I suppose the other point around that is last mile delivery. Can it get right into the sort of urban centres? Is it always going to be outside? What's the view on that? Because obviously land prices, as you get closer into the centre of town, become much more expensive, and you're competing with, maybe hotels, residential.
Well, look, if you look at let's call it Zone 3 London, if anyone knows what that really means, but if you know the tube map, you've got Zone 1, which is the centre, and then you go out to Zone 5. So call it Zone 3, which is...
I live in Zone 3, by the way, just in case that helps. If anybody knows where I live, then that's where I live.
So this may come close to where you live then. But land prices for industrial are now higher than they are for residential. Which, I think about it, is staggering. The best use of the land is for industrial use rather than residential. It's quite staggering. You're seeing prices of £10 million an acre. It is. So the availability to get that is very high. Sorry?
I just said he lives in an expensive neighborhood.
It doesn't seem to be happening in my part of town, I can tell you.
But when you've got, as Robert said, when you've got land, like in London, for these locations, land is 2/3 of the price. If you buy the land for 100 million, it costs you 30 million to build the building. Your cost is in the land. So the availability of that land is so rare, so challenged. There's so many other alternative uses for that land. And the only reason it makes sense now is because the rents are at a different level. So I think I believe specification is important, but clearly the location is obviously always going to be the most fundamental factor in the sector, like it is for offices.
Okay, good. Does anybody have any questions? If so, yes. Let's take them. So there's one there. There's one there. Great. Let's take that up. I'll wander over. There's one there. Perfect. Thank you very much.
I feel special. Yeah, my question was about the type of buildings you were building. You said a lot. Can everyone hear me okay? I don't know. Perfect. You were saying that you guys are building a lot of buildings that have a lot of glass, and you're making them look better and have a lot more amenities, I would say. When you guys are underwriting deals like this before you build them, obviously it costs more to build something with glass roofs and glass above the roll-up doors. Are you finding that companies are willing to pay more to rent that type of property versus just building something that might be concrete tilt-up and have minimal, maybe not as fancy or might not have as many amenities? I'd just be curious how you guys underwrite something like that.
In simple terms, yes, I would say. I think they're increasingly going in that direction. I think 5 or 6 years ago it would be questionable, and then it's quite location dependent. People just want the space. I think a lot of occupiers are increasingly switching on to the fact that they've got to pay more rent for this. They want these sort of facilities, not everywhere, not for every use, but often. Equally on that, I think a lot of buyers, investors are willing to pay more money for buildings with these amenities as well, because they recognize the long-term enhancement value.
It depends a little bit on the type of the investor, but as you just mentioned, the building I just mentioned, close to the Schiphol airport, there was one investor who bought it with us as an investment manager, and he was really keen on this ESG facts. So he was really willing, I want to do that building because it's so perfect regarding ESG topics. I want to have that building in my portfolio, and therefore he's willing to pay a little bit more due to ESG tick marks.
I'm just curious, I had one more follow-up question to that. I live in Las Vegas, so we can't do glass roofs because you would burn to death. So as far as with investors and that kind of... Actually, no, I forgot the question after that point. But anyways, I'll come back if I remember.
Come back to it. And there was another question here, wasn't there?
Thank you. We were discussing about the rental growth, which is understandable. What about the other part of the equation, the yields? To the investors buying or those developers selling, do you think it will stay as is, or you expect it to some compressions, and will you be still okay with that?
I think I'll talk about the UK. Yields are pretty low in the UK, right? So a good quality, long-term leased asset that's brand new will be trading at 3-ish, plus or minus. So if it's a really long lease, great tenant, it'll be sub 3. If it's less good tenant, 325, 350. So that's your yield range at the moment. So do I think they're going to go lower? No, I don't think they're going to go lower. What do I think a shrewd investor needs to be underwriting now? Probably needs to be underwriting yields moving out slightly over the next few years. You know, we've been in a zero interest rate environment forever, you know, since 2008. I'm not sure how many people were here in 2007, 2008, but anyone who hasn't only known zero interest rates. You know, when you go from 0 to 2 and your yields are 3, 3.5, that's a big shift, right? So the only reason people are paying yields of circa, call it 3, 3.5%, is they believe their returns are being driven by rental growth. You know, I heard a little story today which I hadn't thought of before, but it's definitely something I'm going to think of now, which is the desperation for space is so great, particularly in the UK. People are pre-leasing a year ahead, so just when the building starts construction, right? So what's your risk? What's your positive for that? I get my building pre-leased. That's great news. What's the downside? I'm losing 12 months rental growth, right? So what are people doing? Doing day one open market rent reviews. So your benefit for securing the asset is you've secured the asset, but you've got to pay the rent in a year's time. You're not getting the rent today. You know, that's why people are paying those yields. But it would be wrong to assume that yields are not going to push out slightly over the next few years as rates stabilize at, you know, I'm not going to, at 2-ish, call it.
But don't you think yields are this is just one measure, right? I mean, the real estate will be more valuable in the future, for sure. The industrial real estate.
Oh, yeah. Inflation. Yeah, absolutely. Yeah.
So it's kind of like entry point only, right? Yeah. Yield, this 3% is entry point. And it's a question about physical real estate. In the long run, I believe in the long run it's going to grow in value.
Oh, no. Look, if you terms of capital values in 5 years' time will be higher than they are today. I just think the equation, instead of being 325 and a rent of 100, it might be a rent of 130 and a yield of 350, 360. I mean, we're not talking about massive amounts, right? But there's no question capital values are going to continue to increase over the next few years. And that is the attraction of the sector. I just think it's going to come directly from rental growth more than any future yield compression.
But also the question where, I mean, in some places in Europe there is still room for compression. Yeah. Southern Europe, Central Europe. Yeah, core Europe, probably not, right? But in core Europe you'll have rental growth. Yeah. In Southern Europe, Central Europe too.
I would totally agree with that. I think pockets of Europe, I think there's still going to be further yield compression. And these are all rental growth implicit yields as well. So I think if the growth is going to be 20%, then I think the yields are going to go down. Now, I say 20% lightly, but I think you will see that in certain core urban markets. So then I think we need to separate the core urban yields and where we see those going versus the big box million square foot ones elsewhere in parts of the country.
Okay, good. Any other questions? Did you remember your second question?
I'll call them fancy buildings. Do you find that you said you wanted to do like low maintenance buildings, but when you start putting glass on the roof and that kind of thing, do you find that like the maintenance costs are significantly more?
No, but we don't. I think there's a misunderstanding on the amount of percentage in terms of glass on the roof here. But no, what you do in our case, you build a property which will last. So first of all, low on maintenance and repair, but also low on energy consumption. So that's the type of building you want to build, and then you want a generic design which will last, which can accommodate multiple generation users. But at the same time, you want to build a very pleasant and comfortable space. And so if we do a proposal to a tenant, the tenant is going to ask about where does the energy come from? Is it coal or is it renewable energy? The tenant needs to know, what do I pay on energy and all of that, and you get a certificate or a rating for that, etc., etc. So it's definitely worthwhile to invest in that, in building a good property. And you don't have to wait for a pre-lease. If that is the case, then it's a very bespoke or a custom built, and then you would want to wait for a pre-lease. But otherwise you go ahead and build these units, And in our case, we are our in-house construction company, so we can start with building a building. We don't have to complete necessarily until we know what's the tenant going to be, so we can do a bit of fit-out. But fit-out is very small, nothing compared to an office building. So those are adjustments, modifications you can do to a base unit. And once again, you can talk about huge land prices and all of that. I am not so sure. And you need to also think of the plumber company. The normal company who needs a few thousand square meter or a smaller unit need to be still affordable, because you need that plumber guy to be not too far away from where people live. So otherwise you're going to push these companies out of the urban areas and that's one thing. And if you think bigger, like we buy land for average of 50 euro per square meter, and zoned and permitted land which you can build on. That's in Central Europe. Which therefore also why many things happen in Central Europe, because it's business smart, it's affordable, because you just can't continue to pay these huge prices for land. That's obviously different than last mile. This is one of the reasons why we bought into that German portfolio, because it gives us access to so many locations in Germany. And yes, we're also thinking of, can we do multi-level buildings for maybe a plumber and some last mile, and on the first floor a bit of lab space, or this photo studio guy. That's the kind of urban business park type of development which we like to do. So you need to be creative in order to compensate for all the land cost. Yeah, but not necessarily always.
Okay, quite a granular one, that rather like sort of more the sort of light industrial parks in some ways then. So quite management intensive, I would imagine, that approach, Raymond, or?
Yeah, that's true. But we're not shy, we're not afraid of any work. That takes a bit of more time, but there's also building a relationship with the tenants. 80% of all the business we do for existing tenants, so you get to know the requirements, you understand what they need, how they work. We run our business as an operational business, so you'll find our people in the business parks. That's true. But so with the doubling the company, we're going to grow from 500 to 1,000 employees, but that's all right. No, we like to look after the properties and look after the tenants, but that's what it is.
Okay, great. I just wanted to pick up on one point as well. You mentioned data centers, Robert, as well, and we've increasingly seen, obviously, particularly in the living space, lots of movement of capital, in investor intentions towards, the sort of niche areas of that. So obviously student housing, a bigger area of that, but also then senior living, healthcare, co-living, drilling down into some of those sectors. Is that likely to be the case also for logistics, where you've got not quite the same, but similar things in terms of, I suppose, retail warehousing is closer, but you've also then got data centers, you've got self-storage, you've got, just if you're looking at similar building types, is that something that's going to be incorporated in logistics going forward? What's your sense of that? You mentioned it, Robert, so.
I don't know the answer. No, I don't know. Honestly, I don't know if that's going to be. Obviously, the world is changing, and I mean, what I can see, and which way it's going to go, it's hard to say. Obviously, the data center kind of a theme and trend is huge right now. I mean, the need for data is amazing. So we see a lot of kind of a demand from data center companies, and we build for them. They buy land from us, they lease units from us, and obviously, I mean, the rent and the buying power they have, and the strength they have comparing to the usual kind of logistic company is just huge. So the ability to pay high rent is huge too. They need to be close to the population, to the data consumer, but also they need to have a lot of electricity. So the land that has this electricity in Europe currently is very valuable, and we see that, and we see strong demand. So that's what I see, and if it's that's clear.
Okay, good. Any other questions from anybody? I'm going to count down from 5. 3, 4, 2. No, excellent. Okay, very good. Last question then to everybody, just so that we finish exactly on time, which is, I suppose, let's take the key trend for you that's influencing either the sector or your investment kind of intentions, where you're heading, and where you see the biggest opportunity at the moment in Europe. And maybe let's start with you, Tom, and we'll come this way, which gives you more time.
So I think it's urban logistics. Now, the logistics market across the board has been smoking for a few years now. Now, the epicenter of where it is hottest is in the urban areas. And I think that's going to be one to watch because you've got so much money in urban areas, you've got such high populations, but you've also got so much competition for land. So I think that's where the creativity is going to be had. I think that's where really exciting deals are going to be had in the next few years, in my mind. I think that's where more yield compression is going to come, the most rental growth. So urban areas, I think, are one to watch. But listen, the whole market still continues to be very hot at the moment.
Great, thanks. Daniel?
I'd agree, to be honest. I think, urban areas, particularly, you're seeing it in London. London is, if you can find those sites, the price is being paid for the land, the rental growth you're seeing. London is now approaching £30 a square foot for rents. I mean, these are seriously high rents. And I think the shortage of land is a massive problem. And so I think London is going to be a huge beneficiary of that going forward.
Okay, great. Robert?
I mean, for us, obviously, the strong theme is e-commerce as a whole. I mean, and in terms of kind of geographies, I mean, we still see certain portions of Europe completely undeveloped warehouse-wise, e-commerce-wise, that's definitely Central Europe, that's Southern Europe. You still see yield compression in these places ahead of us. Very strong demand from the occupiers, which are trying to expand their footprint and serve their customers. So that's what we see. And also the second trend, which is nearshoring and production in Central Europe, is going to continue to grow. It's going to continue to be a big theme. And labor looks like, from a kind of a standpoint of a geopolitical situation right now, is going to be in Central Europe. And that's a growth story. That's a huge growth story.
River?
Yeah, I think so too. And on top of that, I would add energy and the availability of energy. And within our parks, obviously, the possibility to create a renewable energy, solar, to manage that, to sell that, to use that, to be smart when it comes to consumption of energy. I think energy is a topic. It's important. It relates also to ESG, and I think we are in a very good shape to benefit from that also in a business sense of the word. And what's going on in Europe now is going to change the world, and change is always opportunity. So we're going to see. Sounds weird, but we're also going to see opportunities and going to materialize or capitalize on that for sure. And I think for Central Europe, there's many opportunities for us there. And obviously, I mentioned it earlier, the land bank, something for us, which affordable land. We sit on 18 million square meters, so you can build a whole lot of property on that.
Okay, great. Jan-Philipp?
I think there cannot be a panel without mentioning ESG. And I talk a lot directly to pension funds, to all the final investors. And I think ESG will be a huge topic in the future. And so ESG will be affecting all our work. And as an investment thesis, we talked a lot about this typical new big box with LED lightings and all this stuff. But from my point of view, attractive investment are the older sheds. Because we have to reshape that building, and with a good intensive asset management, we have to work on that old assets to bring it to the next level, to work on that, and therefore it's a good asset manager required, and I think that is a good investment case.
Great.
Yeah, maybe call that brownfields. Right? We didn't talk about brownfields, but that is definitely land scarcity and all of that we talked about. But if there is land with zoning in place which you can redevelop, that's definitely an opportunity there.
Great. Thanks very much, everybody. There's a couple of minutes left which we will be able to use for if you've had questions that you wanted to ask the speakers but you didn't want to ask them in person. Now will be your chance to do that. But thanks very much to everybody for joining us. Thank you to everybody joining us online as well for the live stream. And if you could join me in thanking yourselves for being here and the speakers, that would be great. Thank you very much, everybody.